It's Brian Preston, the money guy.
Bo, you made fun of this one in show prep. This is avoiding paying the IRS penalties.
Now, I got to be honest. We were doing our content meeting, and we were all excited about these. And then we got to number 10, and all the rest of the content team was like, oh, okay, tax penalties. And you like brightened up. You were like excited. Like, oh, no, we got to tell these folks how to, because you know what's the worst thing in the world? Paying. It's bad enough having to pay the IRS. It's even worse when I have to pay them penalties. And you literally got like fire in your belly thinking about telling folks how to not have to pay tax penalties.
Well, look, we are all about helping clients legally avoid, legally is the key word, paying taxes or minimizing their tax liability. And nothing breaks my heart more than when I used to prepare taxes and you'd see somebody who they missed something.
Sure.
And then the government, because the government being who they are, then not only they say, hey, we want you to pay as much in tax, because you didn't get enough in, we also want you to pay some penalties and interest. And that's like, ooh, man, you have not only taken a bad situation, because nobody loves paying taxes.
Nope.
Nobody gets excited about taxes. But then you've taken a bad situation and made it much worse by now adding interest and penalties. And here's the part that Bo and them made fun of me. If you own the business and you have penalties, they're not deductible. So, I mean, that's a problem. I mean, that's a double whammy, because you're at least like, well, at least when some expenses that you don't want to pay, you're like, well, it stinks. But at least the government's in on this with me because I'm getting a tax deduction for it. Nope. They cut this out, so you just we want to minimize penalties as much as possible.
Yeah, one thing I think that's so frustrating to me about IRS penalties is they usually sneak up on, like I'm thinking about clients that we've seen that have had penalties or potential prospects who've had them, and it's usually on the tail of something good.
Yeah.
They got a big bonus and their income was much bigger than they thought it was going to be, or they had something happen, but the withholding wasn't adjusted right, and so the tax liability they owed was technically more than they were allowed to owe, and they've gotten themselves into a big problem. Or they started a side gig that they didn't know was going to be as good as it is.
Yeah.
And they're like, hey, no, it's cool. I held back the money. I've got it in a savings account. I held it back. IRS says, it's not good enough that you held it back. You didn't give it to us quickly enough. And so now we're going to assess a penalty.
That is the catch, is that the government wants you paying them as you earn the money. And that's what the most common penalty that I'm trying to help you avoid is that underpayment penalty.
Yep.
Because it's exactly, I do see it. It's either the small business owner that has a great year, or it's the person that's doing side hustle income and they are withholding or holding back the money, but they're not actually sending it to the government. So let's talk about, how does the government get paid? The government gets paid in one of two ways. Yep. You either do it through withholding, meaning like your wages, or you have money withheld for taxes from your pension or from an IRA distribution. Yep. That's withholding. Here's the cool thing, and this is what I call hashtag penalty hack. Thank you. I mean, we had a lot more laughs in the content
I think after
meeting.
this show, that's going to be trending on Twitter, right?
Hashtag penalty hack is that any withholding is treated as it was made at any point in the year. So if you get to the month of December and you realize, oh my goodness, I didn't pay Uncle Sam what I should have throughout the year, I've got a problem, I'm going to have a penalty. The typical way that your accountant or your tax preparer will help you if you catch this before year end is they'll say, why don't you run yourself a bonus or something where you will have all that money go to withholding, because that will be your get out of penalty card with the IRS. That's why it's hashtag penalty hack.
So withholding is one thing and it's spread, but then there's another way that like small business owners or folks who maybe don't pay themselves wages do, and that's paying estimated taxes. And the government says, hey, they're going to be 4 times a year on these 4 dates that make no sense whatsoever in the realm of making sense. These 4 dates you have to pay estimated taxes.
So if you're a person that makes your income through small business, through side hustles, from investment income, capital gains, prize money, awards, it's all going to fall into that's income that you're supposed to pay income taxes. Now you got to figure out how you pay it. And it's exactly what Bo said, is that you would think, okay, the easy way is quarterly, because there are 4 payments. How many? There's 4 quarters in a year. Like this should line up. I can think
about a calendar quarter.
This
super makes sense.
It does not line up. We all know, like January through March 31st, that payment is due April 15th.
Makes all the sense in the world. First quarter. I'm with you.
Here's where this gets a little squirrely. Second quarter. Business-wise, that is from April 1st through June 30th is your second quarter of the year.
So it would make all the sense in the world that July the 15th should be when your second quarter estimate is due.
Your second payment's due actually June 15th.
Makes no sense at all.
Well, and then the third
It's
quarter.
almost like they set us up for failure.
The calendar, it is kind of a trick here. Third quarter is typically July 1st to September 30th. Somehow, now that one, this is why I do think they're trying to throw you, it seems like a little bit. Somebody, I'm sure, some smarter person than us, probably Charles, we know you're out there watching it, can set us straight on this. It's September 15th. We're back on the quarterly system again. And then the last one is back to, that fourth quarter is from October 1st to December 31st. That payment is due
January 15th.
January 15th.
They just go back and forth, and it makes no sense. But you have to make sure you do this, because if the government deems you didn't pay appropriately in the appropriate time, they're going to ding you, and you're going to get hit with a penalty.
Yeah, I think it's interesting. So the two outside ones, the first and the fourth, are on the calendar year.
Yep.
The middle ones, June 15th, September 15th, are before we reach quarter end. Just pay attention to that, guys, because penalties aren't good. And here's how you protect yourself. I'd be remiss if I didn't give you how do you do this right? And it's called the safe harbor amount. Because here is the good news. For all the things we just picked on the IRS about, I do feel like they have built into the system a little bit of relief. So in case you have that one really good year, or it's your first year of many good years of success, they kind of give you a little bit of protection with safe harbor rules.
Right.
So here's what the safe harbor rules are. For most people, if you paid withholding and estimated taxes that were at least 90% of the tax for the current year, or 100% of the tax shown on the return for the prior year, you're going to be okay.
So 90% of what I end up owing this year, or 100% of last year, will get most people out of jail. That's most people's get out of jail.
Because here's what the
card.
logic is. Now, there's a caveat for you high-income people, so I'll come to you in a second. But what they're thinking about is, so if you had a good year this year, and as long as you paid in 90% of the tax, and it exceeded 100% of last year, you're going to be okay.
You're going to be fine.
But here's the catch: if you make over $150,000 a year, they have a different rule for you. Your safe harbor is that once you make over $150,000, you have to make sure that you've paid in 110% of your prior year's taxes.
So what we usually do is, if we do worry that one of our clients is running afoul, we will immediately go pull last year's tax return. We'll figure out what they've had in withholdings this year. We've figured out what their estimates have been this year, and we will very quickly calculate that 110% number, because that's going to be the one that gets you out of jail. You do a special estimated payment to cover that, and then you don't have to worry about these stinking penalties that just are like salt on the wound.
So here's another tidbit, and this wasn't in our show notes or anything.
I was about to say, we're at the end. I don't know where we're going
this is at the end, but it's something, and since I already blown the 45 minutes, I'll go ahead and give one more tip. As a person who's had a small business since 2002, so I'm quickly approaching 20 years of making estimated tax payments. This is the part that I think is most surprising to people. I know when you're younger, you get excited when you've overpaid your taxes.
Yep.
You get a rebate, or you get a refund. A refund. It's not really a rebate because it's your money, but you get a refund of the overpayment. If you're a small business owner, likely your days of refunds are completely over, because guess what you're going to do if you do have an overpayment? You apply it to next year.
That's right.
Because that's the thing, is that my wife will say, do we get a refund this year? I'm like, honey, we ain't gotten a refund in 18 years. So, I mean, you just don't get, if you're a small business, because you just go apply it to next year, and you just keep rolling this thing forward. And you're just hoping that our favorite taxing uncle doesn't hit you that year with that huge tax bill.
So we've gone through these 10 tips, right? And we already started the show. Benjamin Franklin, I think it was who said it, said, there's only two certainties, death and taxes. But if you are a financial mutant, you do have some control over what you pay in taxes. Tax evasion is illegal. It will get you locked up. The IRS will come take your stuff. Tax avoidance is highly encouraged, and we have an entire tax code that if you're willing to go a little bit extra, put in a little bit more work, plan a little bit better, you can limit and decrease your tax bill. Ultimately, it's up to you to do the work.
That's great. Guys, I think you can tell we're passionate about not only taxes, but also helping you grow your money, make good financial decisions. You are a financial mutant. If you're watching a show like this, is how you minimize your taxes or think about this smartly, you're thinking about things differently. we want to continue to be your resource. So please subscribe. We're so close to 100,000. We're about 10,000 shy. We have the goal of reaching that by year end. And the other thing is, you can probably tell that this is not a hobby for us. This is actually what we make our career in, that we are fee-only fiduciary financial advisors that work with clients all across the country. We have incredible team members that are working with quite a few of you. So I would ask you, if you listen to this and you're like, wow, I like how these guys think about money. I've been watching this content for quite a period of time now. That is the abundance cycle where you come learn absolutely free. We don't ask anything. We want you to apply. We want you to grow. And when you reach that level of success, because remember, complexity comes and finds you. Remember who kind of planted those seeds of prosperity. That is the abundance cycle. That's how we grow our business. For those that need a little more accountability, need some additional nudges, and just don't know what they don't know yet, we also have a free deliverable called the Financial Order of Operations. If you go to moneyguy.com/resources, we have a free deliverable with the 9 steps to the Financial Order of Operations. And if you need even more, we have a course that will also speed up and accelerate that process. So thank you for being part of this journey. We love our Money Guy family, and we love what that creates for us here at Abound Wealth too. I'm your host, Brian Preston, Mr. Bo Hansen. Money Guy team out.